Hello and welcome. It's the 1st of March. You're watching India Market Open, and what a day it's been yesterday. We started with caution from the SEBI, ended with a very strong GDP number, and of course markets did a U-turn. So we start March on a 50-50 note, I'd imagine.
Yeah, I'll pour some cold water at the end of all of this, but yeah, the cues thus far, guys. You couldn't have asked for a better setup for Friday, right? Global markets, GDP, our markets ending on a high. That was perfect.
Yeah, and that's great because Feb has otherwise not been a very exciting month for Indian equities. It's been volatile, and generally you have the IDs of March. So there's a lot of trepidation going into March, but definitely after those rocking, there's no other word, rocking GDP numbers yesterday, we're looking set perhaps for a better March, and we'll come to it in more detail.
I mean, Tamanna, I think it's still a divided house, right? Because a lot of people say the numbers only justify current valuations. Now, whether this is going to give the next leg up to the rally is anybody's guess. I have my doubts, but we'll discuss that.
Yeah. And okay, so from market's perspective, yes, but the fact that India is growing at this pace, despite everything,
I mean, from the Barclays to the city, everyone seems euphoric, but we'll talk about that over the course of the next hour.
Of course.
Quick check on implied Nifty before I toss it over to Tamanna for global cues. It looks like it's going to be a good start. So I think we're taking heart from the fact that the markets, after a very smart recovery in the last hour of trade, are indicating to a gap up this morning. Small gap up, but nevertheless, and it's also Friday, so I think there'll be lots of factors playing out today.
And superb cues from the US overnight, if that's something that the market is looking out for. Feb has been fantastic for Wall Street, no doubt. The Nasdaq ended on a record high, closed on a record high. You've had the S&P also close at a record high, so that's been great. One second, mic's a little, so that's also been fantastic. So the tech stocks rally continues unabated is one way to put it, and we'll just pull up what's happened through the month, through February for the US market. So that's the Feb for Wall Street, at least Nasdaq up 6%, 5% on the S&P 500, and the Dow up 2%. So important data came out yesterday. PCE is something that the Fed watches. It's the personal consumption expenditure, sort of gauge of how people want to spend. So it rose 0.4% as per expectations. It's also an inflationary gauge. So the 2.8% figure that it ended up at, so not higher at least, but it's still above Fed's comfort level. And that then has now definitively pushed the cut expectation to summer, so June maybe, not before that. So, not too much of crying over it though anymore, and that's the important bit. So you saw the US 10-year inched up very, very slightly because of this at 4.26%. Crude has also been up in the month of Feb. I'm just going to give you the Feb picture to understand what's happening next, because OPEC Plus is going to meet. Expectedly, for another quarter, we'll have production cuts, and that might go on through the year actually. So crude want to keep an eye out on. Asian markets are looking good, broadly looking good. Definitely. China data came in on their manufacturing, and that's slightly lesser than expected. But on the other hand, if you just pull up what's happening in Asian markets, not too bad at all. Nikkei, of course, the continuing champion. We should do a deeper story, really, what's happening there. Quick look at fund flows before I hand it to Niraj for the trade setup today. And we were talking about how the close was decent, and you had buys from FIs to this extent after a while. So about 3,500 crores from FIs, DIs 230 crores. DI is a whole different story, because I think a lot of the industry, from what I'm hearing, is still trying to figure out what's happening with their small cap and mid cap funds and where they go next.
Yeah, yes, indeed. But what happens in the US when the US sneezes, the world catches cold, and vice versa. And for me, when Ray Dalio says something, I stand up and take notice. Most people should. And so much talk around what the US markets are doing. Ray Dalio in a LinkedIn post says, and I think we have his quote made, wherein he says that when I look at the US market using these criteria, there's some criteria that he follows. There's a hyphen. We've done a comma here, but nevertheless, he says which is the US markets, and even some parts that have rallied the most, which is, he's referring to the tech stocks, he's saying it does not look very bubbly. So Ray Dalio, of all people, is saying that US markets does not look out of whack, which is a tall statement from a tall finance veteran coming in. So maybe, just maybe, if indeed some behemoths don't believe that US markets is in a bubble. And if the US market stays steady, we might have some good news to follow as well, because we don't have global stress to deal with. Now, the trade setup for the day today, well, global cues, strong GDP data will all aid the mood today. So no surprise there. Samina already mentioned the implied Nifty open, which is about 47, 48 odd points. Yesterday, we spoke about how PCR was at 0.66, and that led us to believe that markets may not really fall too much, and they didn't. Now the PCR has jumped to 1.09, by the way, in a single session. So expiry-related moves keep on happening. But the point is, quant indicators still indicate upside possibilities. So watch out, maybe, just maybe, the chances of an upside relative to the downside are a lot higher. So that's the other thing to keep in mind. Yesterday, we spoke about how autos may have a good outing, considering the expectations that people have from what the Feb data will be, and we'll talk about that too. So autos revved up on expected lines, but I reckon that if the monthly sales numbers come out as expected or better, you might actually have the auto index continue with its momentum. So that's also to be watched out for. But guys, in speaking about Feb and March and what the moves happen in either of these months, here's some data. The last 4 years, and even if you discount the COVID year, the last 4 years, we've seen a temporary top form in February and a fall come in March.
Yeah, the IDs of March, that's what I was saying.
So look at this, and it's true for the last 4 years. Feb 2020, the high was 12,246. The March low was 7,511. Now that was a 38% fall, and you can argue that, chalo, that was the COVID year, so it was to be anticipated. 2021, Feb 2021 high, 15,431. The April 2021 low, 14,151, which is about an 8% downtick. 2022. Feb high, 17,794 on Feb 22nd, by the way. And March 2022, which was, I think, on March 8th, the level was 15,671, which is a 12% fall. And 2023 as well, 18,134 was the Feb 2023 high. The March 2023 low, 16,828, about a 7% fall. We've done about 22,217, if I'm not wrong, in Feb. Now we just hope that the history doesn't repeat, the 4-year history doesn't repeat, and you don't have a lower level.
Great. Feb wasn't that great.
But still we had the high.
I think the good chances Treasuries usually close books in March, and hence the profit or taking money off the table. Well, we don't even know what happened before 4 years. These markets were not as deep as they were, and we probably didn't even care too much. There was a very small portion of equity that probably found its way in a treasury. So one reason you see then the March effect is year-end. Treasuries do take some profits off the table, and we've gained about 3 months in the 10% in the last 3 months. So let's not forget that. While Jan wasn't too strong, the months preceding that haven't actually been too bad. So we shouldn't be too disappointed is all I'm saying. And we've talked about consolidation, we've talked about time correction extensively, and that could be playing out in this series. So it's going to be a difficult March, but nevertheless, we'll take you through all the stocks you want to watch out for this morning. Niraj mentioned how automakers will be in focus. So counters like TVS Motors, Bajaj Auto, Tata Motors, Maruti and Hero Honda will be counters to track on back of auto numbers. PV sales might be seeing a recovery in this month, and that could be the knight in shining armor for some of these auto stocks. Well, moving on from there, let's take a look at stocks that beyond auto counters will be in focus. Yesterday, healthcare providers got hit and got hit bad. Today, pharma companies are back in focus. You've got Biocon, you've got Aurobindo and Suven Pharmaceuticals for various reasons. Let's start with Biocon. They've signed a settlement and license agreement with Janssen Biotech. The agreement is to commercialize its BMAB 1200, which is a proposed biosimilar to Stellar. Well, apart from that, that's of course the good news. Stellar's revenues are close to $7 billion in the US, and this was in 2023. Along with this, that's of course the good news. In terms of negative news for that the markets may potentially react to is Biocon had a US FDA conducted their inspection. They've issued 4 observations under Form 483. These observations do not impact manufacturing and distribution of products. That's what has been confirmed, but the stock might react sentimentally to that news flow. Well, Aurobindo Pharma, that's the other one, where the US FDA conducted inspection. They inspected the injectable facility of Eugia SEZ. They have come out with 7 observations. The Unit 3 of the Pharma Specialties, which is a wholly owned subsidiary of Aurobindo Pharma, is where these inspections were conducted. They've restarted production, terminally sterilized product lines at this facility, but with those 7 observations, it'd be interesting to see what the markets feel about that. In some other acquisition news, you had Suven Pharma as well. They've concluded their merger with Cohance Life Sciences. The transaction, they've announced that merger. The conclusion of that will be over the next 12 to 15 months. Cohance shareholders are expected to get 11 shares of Suven for every 295 shares held up. This will be double-digit EPS accretive to Suven Pharma. So good news on it. We will be talking to the management and, of course, take you through the rationale, what this is going to do to its top line, synergies for the company, and, of course, the conclusion of the deal as well. So that's Suven Pharma for you, and Aurobindo and Biocon. So guys, those are the 3 from the pharma pack that'll be active. But I know healthcare generally got hit really badly yesterday. So.
Yeah.
Just for Suven, I mean, just the fact that Advent's stake now becomes the way it is, right? 67% is a big deal. I mean, yes, on anticipated lines, but that's from 51 to 67. So Advent, such a large presence through Suven, is arguably a big thing for Suven as well. So could be a very interesting one to watch out for today.
Yeah, we'll be hearing from them ahead in the day, and that's going to be interesting. But just on the point of healthcare and programming reminder, we're going to be, breaking down with Narayana Hridale what the impact is for hospital stocks. You saw quite a tumble yesterday because of a Supreme Court order that says that there has to be sort of a limit in terms of the cost of procedures, which from the point of view of the average citizen, all right, important, but you have to understand the other side of the story, that how these hospitals can continue to give quality and, of course, from a stock market perspective, profitability. So we'll be talking more about that. But solar stocks are the other one that I want to highlight. So we know that the Prime Minister had announced a scheme on solar rooftops, and 1 crore households will be given these solar rooftops. Now, the modalities of that scheme have become clear. Yesterday, the cabinet has cleared it, which is an important step to actually, taking it forward. So I would keep an eye on a Borosil Renew, Avari, a whole host. Borosil more than anything else because actual sort of impact in terms of making those parts, that's important. So what has happened is that they have made it clear 75,000 crores odd is what they are going to spend. The government of India is going to spend to make it happen. And that always gives confidence to the market because then there's clarity of the scheme. There are details also out of subsidies which are going to go directly into people's accounts if they choose for this. Loans will be given. Collateral-free loans at 7%. So this is going to be actually a starting point because even if you're not in that first cut of people who are getting government subsidies, once this becomes a system which is in place, the potential upside for solar rooftops is really sky's the limit. So this is one I would watch. The other one is Star Cement. Just quick mention because cement has also been an interesting space, a lot of movement, but Star Cement has received an LOI, about 11% up in a month. Not bad compared to the broader market. It's received a letter of intent from Coal India. 3.12 lakh tons of coal per annum is what they will get. This fuel supply agreement is for 10 years. So Star Cement one. 197 Communications. So 2 pieces of news there. One, of course, is an NDTV Profit exclusive, and the other, just came out a few minutes ago. So the exclusive story that we have is that Paytm is likely to move their merchant accounts to Yes Bank, and UPI transactions will be moving to Axis Bank. But apart from that, also an announcement a short while ago that Paytm and Paytm banks are going to discontinue various inter-company agreements, and shareholders of Paytm Payments Bank will be simplifying the agreement, the shareholders agreement, to improve governance. Now, this is a stock which has had a wild swing down, of course, 33-34% in the month. Obviously, since exactly a month ago the news came up, but it has recovered from its lows. So we have to see what this plays out for them because clearly the books, in a sense, are being squared for Paytm Bank and those loose ends getting tied up. A lot more, but I'll come back to that after you're done, Niraj.
Yeah, no, so for 197 communications. The other piece is what NDTV Profit exclusive was yesterday, right? So that it will be interesting to see both of these things play out. So watch out for that one. Watch out for Dilip Buildcon. We have a management conversation coming in later today. But they've also received an order worth 1955 crores from NHAI. So that's the second one in terms of the stocks on my radar. In addition to, of course, healthcare. Remember, we've spoken so much about it. Also adding to the healthcare luster is the US Jan data, which has been so strong that almost all generic makers could actually see traction in the session today. So watch out for Dilip, aside of Pharma and Paytm, Dilip Buildcon. And a small stock, I don't know too much about this one, viewers, so be careful. But Think Inc. Pictures. Now, I had not heard about this name until I saw the bulk deals, and it's a P-note transaction. In SocGen's case, it might be a prop buying as well, but SocGen has bought about 837 shares, excuse me, and BofA Securities Europe about 307,654 shares. It's a 275 crore market cap company. I do not know anything about it. I doubt too many people know much about it. The volumes are okay, and there's been significant buying happened yesterday. Let's see if the stock reacts. It'll be interesting to try and research a bit about this. But if it reacts, you should know why it is reacting. The reason is possibly this P-note buying that has happened, and significant 6 lakh shares bought for delivery. And that's very large for the stock of that size and that volumes. So keep an eye out for this one as well. There is more, but I'm sure you have more.
Just a quick one on Dilip Buildcon. We are going to talk to the managements. Of course, you'll find out more about that order win and the fact that they are going to be debt-free. For an infrastructure company to be debt-free in 2 years is something that's noteworthy. Just a quick mention on 2 IPOs, Exicom Telesystems. This, of course, closed for subscription yesterday. But talking about liquidity and talking about how flush opportunities or lack of opportunities in the market, this one was subscribed 129 times. So commendable amount of money still flowing into the IPO market, and that's obvious with the kind of subscription that some of these IPOs are getting. So just a quick word on that one. The portion of non-institutional investors was booked about 153 times, while QIB quota was booked 121 times. That is, of course, an IPO subscription that's closed, but Bharat Highways InvIT, this one's also been on the radar for a lot of investors. It's a great proxy if you're looking to play the infrastructure story in India. You can either do it through equities or through InvITs. This one also closes for subscription today. They're looking to raise 2,500 crores. They've already raised 827 crores through anchor investors, but that's the other one that I wanted to mention, guys.
Yeah, just a couple of stocks and areas you should look at. Adani Group stocks I wanted to mention because their Q3 for the year, the group has recorded has put out a record EBITDA growth, and there were notes on this as well yesterday talking about it. Standard disclosures, of course, but 63.6% has been the record EBITDA growth year on year in Q3 FY24 for the Adani Group, and this is driven by its core infra business. So this is one set of stocks that I would watch out for. Vedanta is the other one, a setback, and quite a crucial setback for it. And I'm picking up Vedanta because you had a very clear bull versus bear case a couple of days ago after their analyst call. Some brokerages felt a level of comfort in terms of debt reduction, etc. But the fact that the Supreme Court has dismissed Vedanta's plea to restart their Sterlite copper plant is definitely going to be seen as a negative. So that's one stock perhaps that you should track. Clutch of brokerage notes, but we will come back to those ahead in the show as well.
Yeah, I mean, the City on IT note is interesting. Tech Mahindra and Wipro, some downsides. Just before we go to editor's cut, I mean, there's also Gujarat Gas in, but the auto estimates and just the numbers are interesting before we go to editor's cut. Bajaj Auto and TVS Motors are expected to show growth of 21% and 22% respectively. So those are to be watched out for. So that's the first piece. There is strength in Ashok Leyland anticipated, about a 34% growth expected on a YOY basis. So watch out for that one. And for Tata Motors and M&M, their cars business will do very well, but CV business and tractor business respectively would disappoint. So keep an eye out for those combined numbers.